Welcome to the podcast for getting behind the scenes of the credit industry, what are the challenges, what's the best advice, and what is going to be happening in the next few years. I'm Dan Hancox from CoCredo, and today we're pleased to welcome Laurie Beagle and Martyn Brooke.
Good afternoon, Dan.
Good afternoon.
Good afternoon.
Most of you may know Laurie for founding Forums International, but for those that don't, Laurie started life in retail, then as a window dresser before being vice president for the Chartered Institute of Credit Management, whereby in 2016 to 2018 he was actually the chair. He started in 1991 and with Forums International and has now done over 1,000 forums. Is that right, Laurie?
That's correct, yes.
On developing the credit profession. Martyn started life in procurement and then moved 3 years later into a customer service role before moving into a credit position and has been in that type of role ever since. So has a very rounded outlook on the credit industry. And certainly Martyn has been a fellow of the CICM, the Chartered Institute of Credit Management, since 1992. So now is a consultant partner for Forums International, working with Laurie. So thank you both for joining us today.
Thank you for asking us.
Thank you.
So what we wanted to get straight into were some of the different challenges that face individuals in the credit industry. So we've picked out some topics that potentially might be quite important to those listening and trying to gain the expertise that you both have to input towards that. So the first one we're going to start with is one that Martyn very kindly brought up, which is the increase in the number of limited companies actively trading in the UK. So I appreciate now that there is with the change in regulation, Martyn, there is more micro businesses, so those businesses with supposedly less than 10 employees, and therefore by being smaller businesses they are asked to provide less information, which in effect does that cause a problem in trying to gain a decision of whether to work with them because there's less information there. Would that be fair to say?
That'd be very fair to say, Dan, yes. Recently I have noticed, and I was at a seminar recently where this fact was confirmed, the fact that limited companies are on the increase. Obviously with the exemptions to micro and small businesses, there is obviously data that's unavailable. So you're going to have to source data from other sources, i.e. websites, land registry we've talked about.
Yes.
We've talked about other places like social media, and I do actually personally see an increase in personal guarantees because the HMRC from the 6th of April this year are actually regaining their preferential creditor right. So I actually see that lending will come under scrutiny and it become tougher, so you may find that guarantees will become more prominent.
So for those that don't know, that change in legislation, what does that exactly mean, Martyn, if you don't mind me asking?
Well, since I think it was since 1986 the Insolvency Act was formed. HMRC were a preferential creditor at that time.
Right.
In 2002 that was changed, and then in 2018 the current Chancellor at that time, Philip Hammond, then decided to give preferential treatment back to HMRC. So basically what that means is that they will come in front in the event of an insolvency.
Yeah.
They will come in front of a floating charge holder and any unsecured creditor, and they can go back 12 months, I believe. This is not an area of expertise for me, but I do understand something about it. So in the event of insolvency, HMRC will come along. They will be able to take 12 months back VAT. They'll be able to take employee contributions that haven't been paid over, etc., etc. So what it will do is dilute the amount that's available for unsecured creditors and even floating charge creditors. So it's going to cause a problem, and less money will then be circulated after the HMRC have taken their piece.
Hence the more need for potentially for directors.
Personal guarantees, and I do believe in a gig economy, which I think we're moving to. We are definitely going to require, as I say, more PGs. There's going to be less trading history, and I think you'll find that there may be even more Phoenix companies than there have been to date,
because they can set up and then just
move on and set up again. So maybe maybe the rules for doing that need to be revisited. I don't know.
Yeah. Do you see the same thing, Laurie, from your feedback from the forums that you run?
Yeah, I think parental guarantees, to get the word out, have not been in fashion for a long time. In Ireland, you find that the guarantee is almost built into the credit application.
Really?
So I believe. So, yeah, there will be quite a sea change on that. I think the other end to it is what will we do with if we need to invoke those guarantees at the back end if something goes wrong.
Right.
I know a lot of companies will probably not want to go that far because of some of the bad press it will invoke, and so I think there will be quite a sea change. I think so.
I think there is a difference between. Could I just pick up on what Laurie just said there? There is a difference between the guarantees, as in personal guarantees, and a director guarantee, because obviously if the assets are not there on a director guarantee,
that's as far as it goes.
But I mean, when they come after you personally and you could lose your house, etc., it does become a little bit more serious. So personal guarantees are definitely going to scare directors, I think, and directors should not sign up to them lightly. That's all I'm going to say.
Yeah. What about, Laurie, in regards to with the change of regulations and the access to less information filed at Companies House? Even if we look at the number of micro entities that are around today, I think it fares 90+% of companies will be associated to micro accounts, rather than where we may perceive them to be in small, medium, large arenas, whereby there's obviously access to a lot more information, but are there less business failures within those areas, I suppose?
I think the credit professional that's going to be assessing risk in the future is going to have to be a lot more creative.
Yeah.
Martyn mentioned about social media. It's a bit like a big jigsaw, really. There are lots and lots of different areas that can go to, and today we probably don't need to. It will depend on the value that they're checking out to start with. So the bigger the value, then the more checking you'll need to do. But of course, you can always go to the company itself, and if they're placing the order and they really want your supply, then
they could be willing to
cooperate, and maybe it is management accounts or whatever that you need to get. So they need to supply to give you that comfort level.
No, I agree with Laurie, because obviously, as I said, lending will become more difficult. So at the end of the day, with this preferential creditor with HMRC, so companies are going to have to be a bit more open with their accounts. They're going to have to be a bit more transparent. No more hiding and think they can just obtain credit because they put £100 share capital into a company.
Yeah.
So yes, it will definitely prove a big test, in my opinion.
Yeah, because filing micro accounts today, that's the norm, but it doesn't mean that they can't actually file full accounts.
I think it's a change of mentality, isn't it? I think
it is.
Even with my business, with CoCredo, we file what we need to statutory, but I think that it's opened my eyes to the fact that in order to be able to access more information, there needs to potentially be a change in mentality that you file as much as you can, because then you get the reward from that, rather than necessarily just filing what you have to.
If you're in a business where you need credit ongoing, then that has got to be the driver.
Yeah, but maybe they're going to be burnt before they realise that. So therefore, contacting companies to get credit, and when that company then tries to look at them and build their due diligence around it, there's little information available. So therefore, they maybe don't get what they deserve or they feel they deserve. So therefore, a change in mentality potentially.
And maybe there's a return to the old credit circles where exchange of information between suppliers it's really gone out of fashion because of the regulations. But maybe that will come back in the future in some way or other. Sharing information is not illegal. It's got to be just handled correctly. So,
it's got to be the norm.
Yeah.
Okay, thank you, gentlemen. So what are one of the other challenges that were highlighted by the pair of you prior to meeting today were that with the late payment code, has it stopped large companies from paying their customers late? We hear a lot in the press about how particularly supermarkets are paying their suppliers later than maybe they should. Do you think the late payment code has had any impact upon that? Have you seen anything from the companies that you work with or from the forums that you hold?
I think it has some impact, but it's certainly been in the press recently. The bad boys list, I'll call it that, and the name and shame. Whether that will actually change them for the future, I don't know. Yes, I think there has been some impact. But I think that there needs to be a lot more backing from the government, a lot more publicity around the Late Payment Act. Philip King at CICM has done a great job in that area, but it's not been signed up by everybody, and there is still too much. As you mentioned about supermarkets paying late, almost the big supplier the big retailer telling the big supplier, sorry, these are the terms, take it or leave it, almost. And it's if you're a small business, what do? You want the order, don't you? You want the order. And we've heard, I won't mention it, particularly the company, but there was a big IT company that said, okay, we actually are now going to pay on 90 days. And one of the suppliers said, well, if you do, you will not have our product in your store.
I suppose it depends on whether there is another option, isn't there? If they've got a plan B, then I can guess what the response will be. But if they're a unique product that you can't get anywhere else, then maybe they will have to
it was a market leader.
Really?
And in this case, they had the muscle to be able to say, no, we will not accept it.
Yeah.
You're not going to go from 30 days to 90 days. But somebody that's smaller
may not have that luxury.
I'm afraid is going to have to say, well, we're going to have to fund that extra 30 days or 60 days, and that can be expensive.
Or does that have a knock-on effect upon the supplier? Because then they're having to go to their suppliers and say, we've been hit by these changing terms. We need to follow on that along the chain.
Yep, it's a knock-on effect down the food chain.
Yeah.
So,
Martyn, have you seen any fallout from this late payment code, or are you more of the thought and the mindset from your experience that the bigger you are, the trend generically, the slower you pay, the more power you have?
Well, I think let's say that the suppliers need to be very careful when I'll go back to Carillion as an example. I mean, Carillion were pushing payment terms out, and lots of people thought Carillion are so big that they've got to go along with it.
Yeah.
But it turned out Carillion were doing that because they're using all their suppliers as banks, and they obviously were running out of finance. So what I would actually do is use that as a warning signal. Don't just look at it as maybe the supermarkets, as we all know, that they're cash rich, so they can bully boy that part of it. But you had the Carillions at the other end that actually were in severe financial difficulty, and they were trying to edge their payments out that way. So my advice would be to some of the small suppliers is be very, very careful when some of the big boys are looking for more and more extended terms, because effectively they're using your money to finance their business. And I'm not saying that's the case in every but your due diligence, you just need to make sure, why are they asking for an increase in terms?
Yeah.
Because it's it is bully boy tactics, but there's often something else behind it. But I think to emphasise what Laurie said, I think Philip King moving into the sort of small business commissioner role recently is a fantastic thing for the CICM. And I think he'll do a great job. I don't want to mention name, but there was a big transport company which I know that he's asking questions of as to why their payments are not as quick as they should be. And I think more naming and shaming is required. I actually think it's a great idea.
Yeah.
So I'm in support of the code. It also gives the opportunity for compensation for suppliers to recoup some of the costs they have in trying to chase their own money.
What's that? I wasn't aware of that. So what does that give? What does the payment code offer?
Well,
in terms
there's
of
the late payment.
or?
Don't ask me the exact act. But
Yeah.
there is the late payment act where you can actually, depending on the value of your invoice, and it can be done at an invoice level,
Right.
you can claim compensation back. So it's either 40, 70 or £100 depending on the value of the invoice. So not just your interest, you can actually claim late payment compensation as well on top of the interest. Yeah. So all these things to me are great tools for the let's say the more micro businesses and the suppliers to the big boys, should they choose to use it.
Is that something that you'd need to put in your terms and conditions then in order to do that?
No, I believe I'm not a. No, from my experience, no, I do some debt recovery for some people, and I actually do know that you can charge that per invoice depending on the value, and
so
it's not something you're under the Act. You can do it. It's nothing to do with your T's and C's.
So it's something that you can have in your toolbox if you are struggling to get payment from your supplier. Is not only just the ability to maybe make an interest payment on top of the invoice, but also
some compensation as well as a fixed fee. It's a fixed fee.
Really? Yeah, and I suppose the question is, how many companies know that it's there?
Exactly, I didn't know that at all. So thank you for sharing that.
Another interesting thing, over the last couple of weeks we've had 4 forums, and certainly at 2 of them it's been mentioned that they're getting requests for extended terms. Seem to be back on the agenda. For whatever reason, but
what do you suspect that might be, Laurie? The fact that is there something, I don't know, economically that is meaning that certain companies are doing that? Because you said there was a number of them, or are they all in a similar industry, or is it?
Actually, we had first off it was the pharmaceutical industry,
right,
and then we actually had one of the cross-industry forums, and it was mentioned as well.
Okay,
so it's I'm not saying it's
anywhere,
every industry, but they're saying they're starting to see requests for extended payment terms up front. So and not saying that they're actually getting them, but or giving them out, but so whether it's tougher out there than we think.
I suppose it shows the advantages of maybe speaking to others and trying to find out whether, if you're dealing with said company, whether you're experiencing the same type of payment pushback or whatever it may be, because you may well feel that you're being treated in a certain way, but until you can then regulate that against and benchmark it against another company, it may be they're doing that to everybody or just you, or they maybe see that you're one of their critical suppliers or not. Is that fair?
Yeah, I think it's fair. We run sessions, we run workshops around. That's one of the subjects on what's the best practice for dealing with requests for extended payment as just one, but that's one of the latest ones anyway.
Thank you, gentlemen. I'm very grateful for that feedback. I'm sure everybody is listening. The next topic that we want to talk about, the next challenge we wanted to talk about, was offshoring. And offshoring from a credit basis, whereby it appears that some companies are offshoring their credit function to, I don't know, Eastern Europe or other areas of the world. And is this a smart thing to do? I appreciate that there is, not only from a credit point of view, but there is from a customer service point of view, a trend of doing that. And certainly from my experience in business, I would say that it's pushed back the other way from that now in most. However, from a credit function, you've got a trend now whereby they are potentially offshoring their whole credit function. Is that fair to say? Is that something that you've experienced?
I think we're starting. It's been going for quite a long time.
Okay.
And you're right. You mentioned some of the places: Hungary, Romania,
right,
Ireland, of course. And also people are coming to the UK in some smaller cases. But I think it's a shame.
Why is that, Laurie?
I would. I'm a great believer that we in the UK are the best, and we should be running our operations in the UK.
Right.
I know it's normally for cost,
and
that's the reason why it's been offshored I was rather hoping. I didn't want to mention the B word today, but maybe
might be unavoidable.
Maybe unavoidable, exactly. But I was rather hoping that the future with Brexit means that the UK will actually start to become a more attractive place for offshoring to come to, as opposed to it going to outside to the Philippines or Romania or wherever. But it's down to its cost. And it's not always the easy answer. It doesn't take 5 minutes to set it up. It does take a while to embed it. It can take a year or two before you start to get the returns.
Yeah.
Why?
I suppose there's two ways that I've seen it. Is that you either got whereby you move your operations into Europe, for example, and then you're being contacted from a collection point of view by someone with a different accent, with a different culture, different challenges in language. There's that side of it. But also I've seen whereby some of our customers have maybe got a UK operation, but they've got multilingual people working. So, dare I say, Spanish people are contacting Spanish debts. And is there a real advantage from doing that? So, is that classed as onshoring or inshoring to a certain extent, because you're bringing everything into the UK, but you're getting different cultures to then contact their own culture, but also as well you've got where they're doing it and they're moving to Europe, for example, Eastern Europe, and I know one of our suppliers has done that, and we're contacted on a monthly basis to chase an invoice even before it's been raised, let alone due. And at the same time, there is that confusion whereby is there a difference in language which maybe causes a few issues. So you've got the two sides of it.
I mean, I can speak firsthand because, I've lost 3 senior positions because of what you call offshoring.
Right.
Okay. The first was to Budapest, the second was to India, the third was to Poland. So okay. I can very much talk about this subject till the cows come home. And as Laurie said, it is about cost. To me, it's not about efficiency.
Yeah.
And it's not about education, because we know the CICM is the best and strongest in the world in terms of the UK is the biggest presence in terms of credit management. It is purely a cost, but I think it's being caught up with because the attrition rate amongst shared service centres, as I call them, that's the old name.
Yeah.
People call it BPO, people call it GPO, they call it all sorts of names. But yeah, the attrition rates in these companies now is very high,
right?
And of course they're demanding higher wages as well. And to me, I think I was first made redundant back in 2002, so coming up for 20 years now when I lost my first job because it moved to Budapest, and I know that then moved to India. And
the same operation. The
same operation moved it from Budapest to India. I'm not sure exactly where it is now, whether it's gone further and further apart, but basically that's what happens. And so Budapest became more expensive, India became more attractive, and to me it is all about cost. That cannot be about efficiency, because the cost of moving it, the cost of attrition, the cost of replacing people, the training of those people, and as we know, the wage demands are costing. And I think that the fashion started as being a more for collection point of view, and maybe some transactional processing, but I think the fashion has tried to move risk out there and everything, and I think some companies are now nervous about doing that, so you'll often find that they will have still a base in country somewhere, whether that be UK, and I can name a few companies which I'm not going to, but a few have still got a credit manager presence in country, but they have got a team that's sitting out in Manila or Mumbai or Krakow or whatever. So I think companies are a little bit nervous about letting it all go.
They give them that, they still want the insurance that they can bring it back at.
And they still want the education of maybe you've got to remember there's process improvement opportunities. People are implementing big ERP systems like SAP.
Yeah.
You still need that expertise somewhere to be able to manage that, and that expertise does not exist in those countries, in my opinion, yet.
No, it's interesting you mentioning about different cultures and collections. When I worked at P&A in Sheffield, we had French people, native French people collecting French debts, and native Spanish collecting Spanish debts.
From my experience, that works well.
And it works well, even down to Irish collecting from Ireland, as opposed to an English person trying to put on a French accent and speaking perhaps French very, very well, but it still didn't work. And we used to get new candidates from the universities. Yeah, because you could teach them how to collect, but you couldn't teach them the
mother tongue. The mother tongue.
So it's and it worked very well. Yeah, I always had a joke. So we even did Yorkshire to Yorkshire. So.
I was about to say, does it matter what type of accent you've got in the UK? Is there a commonality whereby, depending upon where you are in the UK, you can more associate with someone of that native tongue, as you put it?
Possibly. No comment, Dan. No comment.
So thinking about people listening to this podcast, is there, we're all of the agreement that offshoring is something to be aware of, and that something that many companies may be looking at, or have looked at in the past, or maybe have gone and done and moved back, or whatever it may be. I'm trying to think about what the listeners can actually gain as a benefit from us, to a certain extent, from you two primarily. Is there warning signs? Is there arguments other than the arguments you've given already that can potentially enable them to benefit from listening to the years of your experience? Throw that one in the mix.
Yeah, that's
thanks, Dan.
I think I'll use the word KPIs because recently I was with a company who did outsource it to India, and the main driver for them was the productivity in terms of how many phone calls they could make. But you can measure the amount of phone calls you can make, but you can't measure the quality of those phone calls or the output,
the rewards,
the output from those conversations. We all know the term DSO, debtor days, DBT, days beyond terms, etc. And I think that those can be maintained by collecting off, in a BPO or shared service environment. But I think from an old-fashioned credit manager, I think that customer-facing relationship is the bit that's missing, and I think you don't build that relationship with your customer, and certainly making 60 calls a day, which I know was the target for this company. To me is just that's not quality to me. That's just quantity. So the one warning I would say is, if you want to maintain and still have a good relationship with your customers, with your sales force, with your customer service and everything else, then you do need to think about where you want to locate these people and what type of role you actually want to give them.
Thanks, Martyn.
No, I understand. I totally agree with Martyn on that, and I do understand also the economic side of it as well.
Reason to do
if you've got a lot of small debts and it's volume, and you probably don't. Do you worry too much? Are they going to be ongoing customers? Then maybe there is an argument. For there, but if they're customers you want to create an ongoing relationship with, build the business with them, then that's not to be put out to a shared service centre or a call centre. No, you need to. It needs a human element to that.
Is an option for that to use a specialist debt recovery agent that maybe has, rather than moving everything out, I'm just thinking off the top of my head, rather than move everything out to an offshore basis, is it an option with your experience? Not so much mine, is it with your experience, the fact that you can use maybe a specialist in that country? Is that an option?
Well, it's an option. It could turn out to be quite an expensive one. Plus, it's a bit like I put that in line, not totally with factoring or whatever, but you can lose some control, and I think that's important.
To the quality of the call,
to the quality, the relationship, and everything else.
Right.
It's a little bit, to be fair, what you call a debt collection agency should be used when you've exhausted all your internal resource or processes, and you're still not able to collect that money. That's when I think the value of a good DCA comes in.
Yeah.
I personally wouldn't use a DCA to outsource completely to it.
Right.
I would keep some in-house control, or if you're going to outsource your credit function, then you should have that resource ringing up on behalf of your company, not known as a third party.
Yeah. Okay.
That clear?
Yeah, absolutely.
Yeah, I agree.